All right, now that we've talked about all the market structure and how to find the whole trend and what that where the market may be going, we want to know now what the market is doing in that specific hour that you're trading. And we have specific hours that we trade in where price has a lot of volume and participation. So 8 p.m. is when Tokyo session starts and there's a lot of people entering the Asia market. And then we have 9 p.m., which is usually a continuation of the 8 p.m. candle. We have 3 a.m., 8 a.m., 9:45 to 10 a.m. And I'm also tell you or explain to you guys how to trade the 9:30 candle. So, what times do I not trade? I do not trade when Asia is leaving the market and London is setting up. So, anytime between 12 to 2 a.m. I'm not trading. Anytime between um I trade sometimes 8 a.m.'s candle, but as soon as 9 a.m. candle hit, I'm either break even or already taking profit. So I try to avoid 8 a.m. honestly because we're building up for that market open. But if you like pre-market and you like the volume in pre-market, you can trade at 8 a.m. So these are the different reactions that our hourly candles can have, showing us the direction of that specific hour. This trade idea, this model, this strategy is literally built for traders that struggle with, following the high time frame trend, but you're getting stopped out in that specific hour. Maybe we're in a crazy uptrend, but in that specific hour, we're having a bearish breakout. So this model supports that challenge in the market. So let's look at the first bullish candle reaction. These are bullish candle reaction. We have bearish candle reactions. The first bullish candle reaction says a strong bull candle with minimum retest. When the previous candle is extremely bullish, the new hourly candle may open and barely retest the one before it. So we can see that. We're going to show an example. We can see that actually going on here. So we're on the hourly time frame. We noted that this was an uptrend. Let's show a good example. Okay, so we have a strong candle here. This new hourly candle, it opened here, it retested this bullish body, and then it flipped higher. We always want to wait for the bottom wick to be placed and then the flip higher. So looking at this strong bullish candle, why is it strong? It has little to no wick at the top. It has little to no wick at the top, strong close at the top, and then it has a little wick at the bottom. So if it wasn't strong, it would be more wicky like these candles. It would be more wicky like this candle, barely pushed up higher. But this candle had a strong push, showing that the next candle is most likely going to keep pushing from where this left off. So we're looking for that new hourly candle. This was the 10 o'clock candle to open, retest this strong push, leave a bottom wick. We're not even going down to the 5 minute until it does this. Leave a bottom wick, flip, and then continue higher. And that is a bullish candle with little to no retest. And then we have a bullish wick retest candle. So what happens in this area when the previous candle leaves a strong lower wick, the new hourly candle may retrace down to test the wick liquidity, then reject and continue higher. So bullish wick retest continue. This is a good example here. We have a bullish wick. What makes it bullish? This candle pushed up higher, closed above here, and this is a bullish wick right here. We came down, we retested this bullish wick, and then this candle immediately flipped within this bearish candle, showing that this candle most likely is going to continue higher using market structure, seeing that we had a high, another high, high, and then we even came down and retested this hourly wick here, right here. Buyers are in this wick. We retested that wick. This candle flipped. We can assume that this next candle is going to continue that flip. And it retested this wick right here. In the middle of that wick, it usually tests the middle of the wick. Sometimes it have a little deeper retracement. Sometimes it has little retracement. And then we're waiting for that candle to flip strongly within that candle and overtake and inverse this hourly candle. Then we're scaling down to our 5 minutes to see an inverse price leg. Bullish consolidation break high. The previous candle is bullish, price may consolidate in a tight range during the new hour before breaking the high and continue the trend. So, say we have, this is a good example right here. Say we have a strong bullish candle, right? And this bullish candle, it came and retested it. This was a strong push. And we're waiting for this candle to flip. Sometimes these candles do not flip. You can see it here. These candles do not flip and they do not continue for that hour. This was 11 o'clock. You also have to pay attention to time. At 11 o'clock, this candle did not continue higher, did not have the volume that it needed, and it failed to push higher. The buyers did not buy in this area, this time frame, and within 12 a.m. to 1 a.m., it pushed up higher. I do not trade these time frames, but it still had momentum in these hours. So we can see that this candle failed to push, which we did temporarily push here. So we will wait for an inverse price leg. We can see if we found one of those. Yeah, we actually did have an inverse price leg. We came up here, we pushed higher. This would have probably stopped a lot of people out because strategies have win rates. This probably would have been one of those trades that got stopped out. What did we do? We retested that bullish candle. We had barely any retest, but then we flipped and inversed this price leg here. We inversed this price leg, so this would have been a bullish looking entry, but instead it consolidated because of the time. So I wouldn't even be trading at this time to even get stopped out. I'm only trading these high volume times where I know price is going to push up in a nice way and continue higher. I'm not trading those low volume times that are most likely to consolidate. So being wary of the time that you're trading and understanding that sometimes we don't have any type of volume in the market, it's very choppy, and knowing when to put your risk in the market. You don't want to put your risk in a market if the market doesn't deserve your risk. So be very careful about that. And then we have a bullish pullback, deeper retest. After a bullish candle, price may pull back deeper into a discount or demand zone, sweep liquidity, and then reverse back up. So let's go back to our hourly time frame. Sometimes candles sweep the bottom of a previous candle. Let's see. We see this hourly candle here displaced through these two candles. We could have targeted the low of this candle because obviously it wants to take something lower. And if we saw it running through this wick, we could have probably gotten a small trade. It took the bottom of this candle and then it went higher. So we could assume that this wick is going to hold, which it did. It held right here and then it shot up. So candles can sweep the bottom of previous candles right here too. This is a bullish wick. Instead of holding the bullish wick, we swept the bottom of it and then we flip. So you're waiting for that flip. And these are different counter reactions that we can get. We can get either a push or a flip within that wick or a flip after taking the bottom of that wick, which can kind of relate to candle range theory, but we're more so looking at reactions within the body and the wicks as well, instead of just waiting for any type of sweep, because hourly candles don't always sweep the previous candle. It doesn't always happen, but it can happen where we didn't flip until we came all the way down and it looked temporarily bearish, but we're acknowledging that we're bullish. So we're waiting for something bullish to happen. If it closes like this, we're coming down here, but we're still in this bullish candle here. We're waiting for something bullish to happen. What do? We swept this low and then we flipped this candle. We could have got an entry from there looking at an inverse price leg. In this area, boom, it's perfect. We closed above this bearish range. We closed above this bearish candle and we closed right here. So boom, that's a bullish entry right there. Targeting these highs, targeting continuation. Stop at the low, the next low after displacement higher. We inverse these price legs, targeting the next high. And I think I caught one of these trades. I don't know which one it was, but that is another bullish reaction. Bullish inside price expand. The new hourly candle opens inside the range of the previous candle, creating inside price, then breaks out in the direction of the trend. This is my favorite one, honestly. This is my favorite one. So instead of going straight down to the 5 minute, I don't even look at the 5 minute until price manipulates inside of a bullish candle or a bearish candle. Meaning, if we're on an uptrend, if we are on an uptrend and I want to see continuation higher, right? Now I'm looking here on the hourly. So say we're creating an uptrend, we failed to break this low, we swept it, we're continuing higher, we made this big move, right? I want to see something bullish happen after we created this big move. And what am I going to target after that? I'm going to come back and target these highs. So boom, what did this hourly candle do? Came down, manipulated inside this bullish candle. You can see the wick here. It came manipulated into this candle. I'm waiting for this to flip, start flipping back. So it didn't flip here. Okay, we got a new hourly candle. We're still being patient. We want to see a candle manipulate within this body, hold the body of this candle, and then flip. This candle came down. It flipped bullish. We could have went on a little time frame after that. What are we looking for? An inverse price leg. So after that candle flipped bullish, where is it at? Right here. We're looking for an inverse price leg. We completely ran through this bearish fair value gap. Yes, inverse fair value gaps counts as an inverse price leg. We don't have to run through this whole thing if we see that there's a big price leg and we're going to continue bullish. We failed to break the low. Looking at market structure, this is a sweep. We did not close below this low. We swept it. So we came down, we inversed this price leg. We did not stop, hesitate. We inversed it, and I would have saw that momentum and immediately looked at the 1 minute to see if we closed it within that area. So we're running through this area on the 1 minute. We're running through this area on the 5 minute. I'm taking an entry. I'm automatically assuming this candle is going to go higher. From there, we could catch a small trade and target the previous highs. So if you want to rewind that, take notes. Even though the RR is a little funky, you're still taking profit and you're making more than you risked. So bullish inside price. We're going to look at another example. Okay, say we are on a run and we're going up, displacement higher. We see this strong bullish candle, right? When this next hourly forms at 10 o'clock, 10 o'clock is one of my trading times. I want to see manipulation. I want to see this candle leave its bottom wick, which it did in this candle, and then flip. Once I see it start flipping and displacing past the high, and I mean displacing, like it has to be strong bullish candle closures on the low time frame past the wick of this high or the high of this wick. I'm entering and I'm targeting higher. I'm targeting next draw on liquidity, which over here, because we don't have anything here, the next draw on liquidity are these highs, these wick highs. We gotta target all of this. Now would have been a take profit trade. That's exactly how I trade. I'm looking at the previous candle, and if I need to, I'm looking at the previous candle before that because maybe we created a weak candle or a candle that won't do much. I'm looking at the candle that was previously strong for direction. And that is all of the bullish candle reactions. That's the end of this video.